A deepening energy crisis in Europe has finally allowed oil prices to break through the level of $100 per barrel. Moreover, extreme heat and drought will continue to pile pressure on the European energy systems. Energy is running out while the region still needs reserves for the heating season. Indeed, Europe is not ready for the coming winter. It's bracing for a hot period. Moreover, Europeans need not only to find additional supply options, but also an alternative to Russian supplies. And this causes a booming demand for energy, which is expected to keep pushing oil prices up. From a technical point of view, Brent crude oil futures bounced off the support level of $93 per barrel, which led to an increase in the volume of long positions. As a result, the quote reached the psychological level of $100, where it eased the pace of its bullish run. A subsequent upward move will depend on the price behavior near the control level. If the quote consolidates above the 100 mark, at least on the 4-hour chart, the benchmark will extend gains, heading towards the level of 105. An alternative scenario suggests a subdued movement within the psychological level with a gradual increase in the volume of short positions. Meanwhile, gold continues trading in the area of $1,790 per troy ounce. The yellow metal has been drifting around the local high of the upward cycle for the third day in a row. Thus, a sideways range of 1,781 and 1,800 has been formed. And in this situation, the best way to make a profit is to trade with a view to breaking through one or another boundary of the range. And this will help determine the asset's further direction. Please keep in mind that a breakout signal must be confirmed at least on the 4-hour chart. And this can be attributed to uncertainty over further steps by the U.S. Federal Reserve. Moreover, Fed members have made conflicting statements. In particular, San Francisco Federal Reserve Bank President Mary Daly said yesterday that a half percentage point interest rate hike in September makes sense. At the same time, she added that it's far too early for the U.S. Central Bank to declare victory in its fight against inflation. That is, the Fed admits that inflation could accelerate again. And this means that even if the regulator takes a less aggressive rate rise stance at the upcoming meeting, the next interest rate hike will be bigger. Thus, as long as uncertainty persists, the market will most likely keep standing still. The Russian currency continues to show remarkable resilience. The dollar-ruble pair is still trading in the range of 60 and 61 rubles per dollar, with almost no attempts to break out of it. And this signals a possible imminent trend change. After all, the market cannot stand still for long, and the only question is in which direction the quotes will move. Given continued monetary policy tightening and the effect of restrictive measures imposed by the Ministry of Finance, the market is likely to fall below 60 rubles per dollar. This, in turn, will probably force the Bank of Russia and the government to take action to weaken the national currency. And that's all for now. We continue to learn developments on financial markets. Subscribe to our channel and follow news with us. See you soon.